Good morning, everyone. Today is Monday, January 26th. We're snowed in, and today is, I guess I'll call it the second episode of the Options Roundtable, where we gather the various options pros from the Discord, or options degenerates, maybe. It's a better word, not sure. And we just talk about various topics. Today's topic is safe, quote unquote, safe option strategies. So we'll begin there, and then since we are live, we'll take questions in the chat. So if you have questions, just type question with the question, and then we shall answer. Good morning, SB, Jeff, M Cheese, Jake, Joey, and if someone else joins, we will let them in. How you guys doing today?
Morning, doing well.
Morning, doing great.
Good. Morning.
Cold.
Yeah.
Snowy.
Speaking of cold, let's see who has the coldest temperature. Let me check mine real quick. I am at 23. Feels like 16, I think it said. Is anyone lower than 23?
Believe it or not, I got you beat. I'm at 20. Feels like 10.
Wow, look at that.
I'm at 19.
I'm at 7 degrees. Feels like -4 right now. That's in Oklahoma.
Warm weather.
Go do your polar bear run.
Mhm.
You win.
No one lost power or anything, I guess.
Not so far.
That's good. Yeah, that was the worry. People freak out, buy everything, and get generators and think they're going to lose power. But we didn't, so we're good. All right. Thank you all for being here. Let's talk about safe option strategies. So if someone walks up to you on the street, right, and they say, hey, options bro, what's a safe strategy I could start with? Yeah, I'm just trying to learn. I want a safe way to trade options. What's your answer?
Paper trading. Start with paper trading.
I think I would say would be maybe, I guess how I started is 20 delta puts, maybe. Did most of you kind of start on there, or did you guys start with covered call direction?
I started with covered calls.
I think you're right. I did puts as well. I pretty much followed Rod.
Yeah, I think the first thing was the wheel. So I can't remember, honestly, but I'd like to think the first options trade I did was sell a put, probably on GameStop, when it went higher.
Great safe start there, Rod.
Yeah. Well, I wasn't looking for the safe start. I was looking for the quick win.
You came out swinging for the fences.
Oh, yeah. And then the second one was like TQQQ. So I was like, oh, this is
from the pan to the fire, huh?
Oh, yeah.
So I don't know. If somebody asked me, what would be a safe options play, maybe you're thinking that they already own some stock, probably. And if you're just, hey, I just want to generate a little bit of income, have what they considered, an option overlay or something, would be probably right a 30-day cover call under a 20 delta. That's probably something I would say, something like that.
Okay, so a 30-day covered call or cash secured put?
Yeah, one of those two. Just simple first step. Very low probability, under maybe a 0.15 delta if you just want to be safe, or 0.10. You just get a little pocket change.
Yeah, but you would only obviously tell them covered call if they already own the shares, I assume, right? We're not going to tell people to buy shares and then do it, or would you typically just say let's start with selling puts on stocks you like. Maybe.
Well, that's what I said first. A second ago, yeah, let's start with selling puts. Now, if they already said, "Hey, I've got some stock here. I'm wanting to sell some calls, generate some income," then the other.
Now, the famous follow-up to that is, I don't want to lose my shares, right? So,
okay. Well, first, don't sell options.
wow,
That's the first. That's
that
the
ends
first
conversation
comment.
right there, huh?
If you're scared to lose shares, and that is the top concern, do not sell an option. Just hold on your shares. That's number one. So, but the moment you sell an option, you sell a cover call or sell a cash cure, you're agreeing to do something at a certain price, and one of those things is release your shares. So you just got to accept that on the front end, but you're getting paid for it.
Exactly. And then,
or you can just accept that you'll roll up for a debit. There's always a way to keep the shares.
Yeah. So there's not always, once you sell that covered call, even if you get in danger, there's always ways out, right? Unless, of course, early assignment, which we could talk about too. But yeah, that's a lot of people.
For a price, you can keep the shares. That's right.
But,
yeah. I mean, do you want to be profitable, or do you want to keep shares? Then that becomes a question.
Yep. Exactly. Okay, so when you guys started, what to you was high risk, and what today to you is high risk versus safe? Do you think like the wheel strategy in general is just an overall safer strategy, and would you call buying leaps high risk, or is it all safe to you?
I would say the wheel is definitely a safer strategy than buying leaps. Yeah, just because especially if you're doing anything cash secured, you're already just obligating yourself to buy the stock. So the worst that can happen is you own the stock. The worst that can happen on a leap is it goes to zero. So you don't own anything after that if the stock does happen to go down, below where your strike price was. So it's always going to be a little lower risk just to sell the puts and acquire stock.
But when you sell puts, it can go to zero too, right?
That is true. So you want to make sure you're in a good quality stock or an index, which I always like to play in as well.
Yeah. And at least you get paid. If it goes to zero, you got something in the process. You didn't pay them to go to zero.
That is true too. You lowered your cost basis right off the bat.
Yeah.
And you chose a strike that you would like to own the shares at. So what I like to do is just at least try to be near some sort of support area. And then you can always, have a stop. So you can close out of the contract early if you like, or you can acquire the shares and just have a point where you're just going to sell the shares and get out, if it starts just going the wrong way and a wrong trend, So of course, me, I like to use the moving averages. So you can just set your stop place at, like, say, the 200 moving average. Just say, okay, I'm going to get out right there if it's a single stock.
Here's the safe thing to do, right, Rob? Sell a bunch of cash secure puts on MSTU.
I already did that.
Been there, done that.
I think we all did that at one time.
We did some tax harvesting loss on that one, didn't we, guys?
Yeah. Well, that was our plan, right? All along, that was our plan. We were going to tax loss harvest it.
I've been profitable on all these strategies, and I've taken some nice hits on all the strategies. The wheel, I remember selling for a little while. I thought I was going to be financially independent or have just a secured option play by selling puts on TNA every week until I owned 1,000 shares, and then not so much, and then they dropped 50% after I was assigned them. So it can, and that's not a good example. Triple leverage anything is not a good example.
Yeah.
But it goes all back to that first episode, man. It's stock picking and timing. Like that is it. Like Cheese is saying, you stay with the index. If the topic is safer, you start with the index and kind of stay with the index probably.
Yep.
Yeah. So when you tell a beginner, right, stay with the index, and let's keep the focus on the wheel, right? How are they supposed to trade the index if they're broke, right? Because the indexes are a little ridiculous. Or is there non-leveraged version of the indexes that can be used?
I think Joey's used it a few times, but I believe XSP, something like that is going to be a little lower priced. What is that trading at right now, Joey? 100, 150?
No, so XSP it's a tenth of the SPX. So it's actually in like the 670 range, I believe. Yeah, but the thing is, you know how I have to do it because I don't have the capital to. I'm sorry.
I said Joey's a high roller.
Oh no, definitely not high roller. I use like defined risk trades, so spreads is how I am able to do those. You can set your wings to like a $300 spread or $500 spread. The nice thing about XSP, you can make your wing as small as $1 spread if you wanted to, which is $100 defined risk. Yeah, that's the only reason I can use those indexes is because of having the spread, the spread defined risk. So
yeah. So
Yeah,
I call them something different.
I call them the Joey trades.
Yeah.
I think that might be right on it. Is if you don't have a bankroll or a portfolio with a decent balance, maybe you do start with spreads. Put spreads. I've got a couple of buddies that are doing that. Their count size aren't that big. One of them's up 60% so far for the year. He's just selling spreads, and if you don't have enough to just sell the cash secured put, and just sell put spreads.
Mm-hmm. Yeah, I was going to say
if you want to stay in the indexes.
Yeah, but don't you think that's a little complex, like for newer people who are trying to start, or do you think that that's something that beginners can learn?
I was a little intimidated from like spreads early on. But I started kind of just with the covered calls and selling cash secured puts when I first began, and I kind of just stayed away from spreads because it was a multi-leg trade, and that kind of intimidated me. But probably about a year later, I was like, maybe I should take a second to see what actually all consists of a spread, and realized it wasn't that bad after actually placing the trade and seeing what it involved. It was just a two-leg trade, and I liked the defined risk aspect of it. So I think if you're already selling covered calls or doing cash secured puts, you could just read into it a little bit and figure out a spread. I don't feel like it's too much complicated next level of a strategy to use.
But if the SPY was say $20, would you still do spreads?
If it was a $20 stock, no, probably not. I'd probably, I would do just a full cash secured put on that, or a covered call if I had owned it already, personally.
Okay, so for you, the spreads are as needed, but the priority would probably be, just doing the regular wheel strategy, selling puts, selling calls, if affordable, I guess. Right. I mean, honestly, I'm surprised at this point. There's nothing out there that, I don't know, I guess we'll say an ETF or index available for just a little cheaper, that replicate. I know we have the leverage. We have double leverage. We have triple leverage. And I have that. I'll pull up. Let me pull up my screen real quick.
Hey, Rod, what about, I think one I was thinking of that's a smaller price, QQQM. I think that's one. It's a version of the NASDAQ. I think it's a little smaller.
Yeah, and you got the SPYM as well. I've got some of that in my Fidelity account, my HSA, because I didn't quite have the balance to go straight SPY. But I don't think, the options on that are going to be very limited.
Yeah, that's the only thing. I don't think it has a good chain.
QQQM is $256.
That's a little cheaper.
SPYM is $81.
SPYM?
Yes.
Yeah, they changed the ticker on that one here in the last few months.
Okay, that's a little better. It's under 100.
Okay.
May have 0 options though. I really haven't looked at
Oh,
options.
okay. Yeah.
Just
Maybe in
buy and hold.
QQQM, like, don't they only have monthly? I don't know. I thought I saw like.
Yeah, probably.
Okay. Yeah. So do you agree with me? Like, there's a gap there. Like, there's an opportunity waiting.
For sure.
Yeah, I agree. Very
Okay.
much so.
I always think that, and I'm like what
It
are
would
we
be
doing?
nice if they did some micros, kind of like they do in the futures. You know, they do like a tenth of the size.
Yeah, I was just about to suggest that. I feel like that's a missed opportunity. The kind of like a tenth of the current stock price of their own ETF to get a little more options volume going.
Oh yeah.
What a great problem we have. SPY and QQQ are too high because they've grown too much.
Have they? When's the last time they did a forward split?
No idea.
Or have they done a forward split?
Find out. Pull something up to check that real quick.
You know, somebody's going to have to scan. They're going to have to look through. They're going to have to research for a stock price point that their portfolio can manage, and then pick from the best choices they see in that group. You know, if you're going to get started, you got to work with the factors and the variables you have.
Yeah, exactly. But we want it all, you know. So
really, the best thing if you are going to do a spread on an index, go with what you can afford. But the tighter you go, usually the harder it is to do any kind of defending. That's the only thing with that.
Yeah.
It also takes a little bit longer. You got to hold those closer to expiration usually to get a profit, unless you're doing the 0 DTE, which we have some guys that do that.
So I did when I made this. I don't know if you guys saw this. These are the double leverage indexes, which are a little more affordable. But I've never really heard anyone talk about them, and I don't know how their chain is. But have you guys ever traded any of these?
I think a lot of them are monthly also.
Okay.
Which is why I usually do the triple leverage, because they're all weekly.
Yeah. See, the market wants us to be degenerates, and even UPRO, man, UPRO's got to do a split. They're getting a little expensive there. They've always been expensive though. But,
yeah, the QLD did an SSO. I believe those all did a forward split recently, a 2-for-1 forward split, because the QLD was in like the 150, 160 range before it had split. Same with TQQQ. That ProShares in general split like 30 or 40 of their ETFs here in the last few months.
Option question: do you prefer to buy or sell options? I mean, I think we're all pretty much sellers here, right? Or does anyone buy leaps too on the side?
90% of the time I sell.
Yeah, same here.
Absolutely.
If we do buy an option, is to sell something against it, usually.
Yeah, exactly. Yeah, about a close on a close or a roll.
Correct.
Thoughts on 0 DTE? They've been around for 2 years. Have they only been around 2 years?
Maybe a little longer.
I still haven't entertained 0 DTE. That's going to be my retirement goal, to play with 0 DTEs. But I think some of you do it, right?
Yes.
Oh yeah, Jeff does.
Is it worth it?
Is it worth it? Yeah, on the days that you pick the right thing. The thing I like about it is you either make the right bet or you don't, and it's over.
And it's over, right? Yeah.
And we cash settle on most of them, and you just pay. You just either collect or pay, one or the other.
Yeah, because so if you look like at the Roddy, right, which I think we're all familiar with, would you do the 0 DTE on that? And what delta would you choose on the covered call? Like we look at IWM, for example. If I said, I'm going to do 0 DTE. I'm going to sell daily calls. All right, let's do like 12. So today,
there's no reason you couldn't, but I really haven't thought about it.
So if we do 0.2 delta, what are the columns like?
You probably want an out of the money strike if it were me thinking about it. I mean, because if the stock starts moving up a lot, you have that delta problem. Like if the ROTI is at 80 delta and you choose an at the money strike, that can go on the money.
A 0.2 delta is 267 on IW. I would not be comfortable with that. Right, on a one day, I guess. But how else are you going to make money, right? So you get 10 cents maybe for, I don't know that it's in my head to try it one day, but I just haven't ventured out. You guys mostly do, or is that Jeff? You mostly do puts on the daily, on the 0 DTE.
Well, I'll do puts or calls on SPX, and then I like the ones that Joey has come up with on the XSP. He's doing like 7-day option spreads, which seems to be pretty good actually. For the most part, it's been working out. I've been running them too, and for the most part, they seem to work out. It's I don't know, Joey. What do you use for coming up with a level?
So I've been doing about a 15 to 20 delta, 7 days to expiration, and my spread on my wings on the XSP, I've been doing a $3 spread, and I've been trying to collect about a $75 credit, and I do condors on them, so I'm selling the call side and the put side to create the condor. And I'm looking, about $37, $38 for the call side and the put side to combine for $75. And I've been closing them out if I get to about 80% profit, which I've had I've had a couple now that I've been able to close just about 3 days after opening the trade, had became 80% profitable. So, it takes quite a few days of risk off the table getting to close at that rate. But so far I've been having pretty good success with them, and but I know we're kind of in a low VIX environment right now, so I guess I'd have to rethink this if the VIX would kind of stay elevated for a while. I don't know how well it would be in an environment like that. So, but I've been liking them. They're kind of you set the trade for the day, and then you just kind of let theta do its thing in the background.
So are you rolling like one a day?
So I personally, I don't roll them. I just open a new trade. So at any given time, I'll have 5 open for the week. At most, sometimes like right now I have 3 open because I have 4 open at the moment because I was able to close one out a few days early on Friday that was supposed to expire tomorrow. So at the current, right now I have 4 open.
I didn't say that well. I meant opening one a day. And so you've got kind of one rolling off and one rolling on?
Correct. Yes, that's correct. Yeah. And I'm just doing one contract at the moment, but as capital allows it and buying power, I'll either start to spread the wing out. Like I'll go to a $4 wing and try to collect like $100 credit. And then eventually, I'll start adding contracts to it. If the strategy continues to work and, can stay consistently profitable. I plan to scale it up.
This is going to have to be an episode now because you're getting deep in here.
Deep in the weeds. Sorry, guys.
No, it's good, but I'm interested. So, if you're down, let's break it down one day.
Just put your whole portfolio on silver, and you'll be fine.
Yeah, right.
Which brings up another question from Dylan. Do you guys have any thoughts on precious metals, or is it too late? Did we miss out?
No, go ahead.
Oh, I've been talking. You guys, I'm yapping. You guys go ahead.
I think precious metals will be good for a while longer, but I don't think they will stay good, and I do think they're going to crash.
Cheese, what do you think?
Yeah, I mean, look at that chart right there, right now. So you can ride the momentum while it's there. You just be ready to get out when it turns. That's all I can say. But yeah, I mean, generally it'll make run ups like this, and then it'll start basing out for a long time. That's usually how it starts working out in these metals.
So buying a 1 year leap on gold or silver, maybe not a good idea.
I would let it come down a little bit if you're going the leap route.
Yeah.
You know, but like I said though, you can ride it up for it could be going another couple of months at least. So you can just, I mean, if you want to do it, you can do a shorter term leap and just kind of be nimble when it comes down.
You know, there's a bigger picture to that too. Depends on kind of, I guess, what you think the variables and the factors are that continue to push it higher. And if you think one of the things out here is, you know, general geopolitical uncertainty and political uncertainty sort of around the world, and things changing in the market, you know, due to political leadership, might be a couple more years left in this thing.
Mm-hmm.
If people around the world are moving to gold out of, you know, treasuries and things like that because there's some shaking confidence, then it might could run a while. And then you've got silver that, unlike gold, has the industrial usage, and it's been an imbalance of supply and demand for what, at least the past 5 years globally, right?
Mm-hmm.
So silver may have a ways to go, but then again, I mean, you know, that's trying to read tea leaves, but it seems like it's not out of the question for silver to, I don't know, this may sound crazy, but 200 plus.
Yeah.
What's anyone know a copper
COPP
COP?
or COPX, both of those maybe.
Okay, so copper's doing better than gold. Yeah, I'm just looking at like the 1 year. Again, people fighting inflation or whatnot. Silver obviously whooping ass.
And don't forget about your miners too, Rod.
Yeah.
You got
That's
your
what
adjacent miner stocks.
that's what I'm in is miners right now.
I've got some of all of that. DDX, and then there are silver and precious metal miners. I'm in MP, which is that mining operation in California. Got a little TMC, which is that C4 crazy non-profitable gig.
But do we think like copper's next here? Look at silver and then gold and copper. It's like, are they?
Yeah, it's pretty,
silver just so
correlated
far
to silver. Yeah, it seems like it's correlated to it just because it's in industrial metal also.
Yeah. Okay. All right. I have a question for you guys. All right. Let's talk about extrinsic. All right. I don't know if any of you saw this message. So, you know, I'm ready to dabble back a little into the wheel, right? And now, you know, you guys got me talking extrinsic all the time. I'm looking at TSLL, right? Selling a put, you know, just one put for fun over earnings, an aggressive strike price, right? So if I look, it's currently priced at 1872. So I'm taking the 4 strikes surrounding that. Let me add Rob in. Good morning, Rob.
Hey guys. Good morning.
Just in time for a question. So TSLL is currently at 1872. Looking at 1850, 1950, right? So obviously selling a put at 19 and 1950 is in the money. So if I go over here, this is how much each contract is per share, at least, as of the close on Friday. And then this is the extrinsic income per share, right? So obviously the out of the money is the full amount. The in the money is different. But when we think about, I guess my question is, when we think about selling puts, is it better to annualize your yield, look at your yield based on only the extrinsic premium, or do you guys still just do the overall premium? Because when I look at just the extrinsic premium, then to me, it's a no-brainer that selling the first put out of the money, the first strike, 1850, is worth it, because their extrinsic is $1 greater than these two, which you have to put up more collateral, and obviously greater than that one because it's less. But the yield on that is the highest of the bunch. So what do you guys think of using extrinsic to do your yield?
Yeah, I mean, I prefer to use that for my yield. Because especially if you're rolling covered calls, week after week, even if you roll up a little bit for, not as much credit, you still got to take into account that you do get more extrinsic value, by moving closer to the money. So yeah, I take that into account. So like, just say if you rolled up, a strike by $1, but let's just say you pay a debit, of 25 cents, the difference of that is 75 cents. So that's how much extrinsic you've really made. Now the caveat to that is you got, to make that fully, you have to have the stock price close over that strike, that following week. So that's the only thing. If you've added 25 cents to the cost of your trade, you got to make sure that it closes above that to make that fully realized. But you can just keep rolling it week after week, and that's kind of what we do with the Roddy.
Yeah, what I would say on that, if you're starting from point one, is you got to start with the realization, of course, we know this, that you've got $1,900 and you're ready to own 100 shares of TSLL. That's point number one. Point number two is, if you're in the options selling game and that's your strategy, you're producing, income, you're producing cash. If you don't look at extrinsic and balance it, then you completely miss like what the whole meat and the function of options are, because that's what they are. Options are time, and extrinsic is just that. It's the value of that time. So and it's always going to be the best right there at the money, like that first tick above the money. Now, I'm not saying that's always the best spot to do it, because you might have other variables. If you have conviction on direction, if you're unsure, if you want to be a little safer, that means some different things to different people based on what your strategies are. And that's a longer discussion that we can get into or not. But that's what I would think about. Now on TSLL, I've got both some calls with some zebras. I actually have a few still basic poor man cover calls with I think 3 or 4 leaps. And then I did a put zebra on TSLL, and I'm selling in the money puts on that and have for about a month now. And so that's been fun and neat to see that flip, that opposite side to work in the opposite direction.
So when you go in the money, right, they give you, do you always, you have to count that, right? So like 19 is 28 cents, right? That's the intrinsic. So you really can't count it, right? Because you're putting your money on the line for that differential, which is why the extrinsic is really what you're getting. Like you said, the time value, the risk premium, essentially, right?
Which is why if we go to, and we're just talking here, of course, but if you go look at your IWM trade on the Roddy, look at that, and you will see a big number of intrinsic, huge.
Oh yeah, I'll just pull it up on here. So my call, well, yeah, the intrinsic, where is it? 1209. His IWM is at 264. My covered call is at 252.
And how much is intrinsic? Almost the whole thing.
Yeah.
Yep. And see, that's kind of what we were talking and messaging and whatnot, is you're doing nothing but spinning your wheels there. Unless it has a big pullback. Then you're a genius.
But hey, it's red. It's red in the pre-market. So you gonna call me genius?
Absolutely, you are. Look what you built here. You're a genius. But at that point, I think it's better just to get all the way out and reset.
Yeah, otherwise
have
we're paying a lot of
cash
debit
to roll it up, get out and reset.
Mm-hmm. All right, so you brought up the IWM situation I'm in. I want to go around the table and let's hear. I don't know if you guys are familiar with my current IWM trade, but I'll give a quick recap. I have a 250 synthetic cost basis, and my current covered call has been in the money for quite some time, a little bit. I'm sitting at a 252 covered call, right? So the RODI expires January 15th of next year. The covered call I'm doing is weekly. So what is the best solution? I'll let whoever wants to go first. What would you do?
Go SB.
Well, I know what he wants to do.
All right. Well, yeah, I'd say what I could do. What I would do. If you want to continue the RODI, I mean, kind of like what SB was saying, I would just roll up your position. You know, the RODI strikes. I would roll that up and reset it, and you can get some credit for doing that.
You would roll up the covered call, right?
Yeah, you could roll up the whole thing. You could roll up the covered call if you just do that by itself. You just have to pay a pretty big debit. But if it were me, I would roll it up, not all the way to the money. I'd roll it maybe halfway. So I'd go up to say like 257, 58, something like that.
Mm-hmm.
Exactly what I did on one of mine. Exactly.
Yep. So and if you
wanted
to
roll this up, maybe $5, and you'd roll the synthetic up as well, and maybe just a little as well, I assume.
You could do that just to save some of that debit cost. Now, if you don't mind having a little extra debit and then just kind of recoup it on the next roll, you could wait, possibly IWM maybe coming down, the next week. So you could do that and just wait and see what happens.
Now, if
it doesn't come down, you'd have to just keep rolling up.
If you're going to roll that base, if I decide to go to that step, then I'm going to probably try to roll it enough to get closer. I probably wouldn't roll it all the way to the money. I'd still stay under it. But then I would try to maybe roll the call on up to maybe $1 or $2 below the strike price. That's generally what I try to do. If I'm going to go ahead and collect some of that, and I may add a little to it to get a full reset to boost my extrinsic on a little higher. That's what I do. Now, Cheese, you may say it but if I was going to roll that long, I'd try to get a little closer than 57.
Yeah, I would agree.
You would try to roll the long call to the same strike as the covered call?
Well, you're at 251. What's your RODI setup right there again?
250 long call, 252 covered call.
All right, so your 250 setup, I would probably look at, and what's it, 267? How high is it?
264.
264. I'd probably roll, if I was going to roll that long, I'd probably roll it to 260. And then on the short, I would probably get that short about 262. What I would be that'd be my target spot.
Okay.
I mean, that's kind of where I'd start, and then I'd start looking.
Yeah.
And I know then that might give me enough to cover that whole debit, or I might still need to add $100, but that's okay. I'm reset because if I go look at that extrinsic, I'm still gaining that in the overall.
So rolling this 252 to 252 every week, collecting premium, but a small amount is not really worth it. Is that what I'm hearing?
Not for the capital at risk.
Yeah. Okay. Anyone else
Take
have
that
a?
capital? I mean, you could take that amount of capital and go do better in TSLL for sure.
Yeah.
But that IWM is a great play. It's an index. It's going to consistently do. And the problem you have here is a good problem. It's a good problem. You're ahead. It's just you're just holding that value in the setup.
Almost ahead. Like, well, the tricky part is once your delta on the short call goes above the delta on the long call, if IWM keeps going up, you're going to start losing money. Like,
yes, you will eventually. Yes,
it won't keep up with the.
So
pressure.
better to do this sooner than later.
I think so. Usually, yeah. Usually, like when your long deltas go over your short deltas go over your long deltas, the performance covered call, you start losing money to the upside.
Right, which is why you want to have that the highest delta you can on the base position. The zebras work, really well for that. If you have that situation and you get blown through, the zebras are a whole lot easier to manage.
Yeah, they'll keep the 100 deltas pretty much the whole time.
Yeah, exactly.
Rob, you said it in a technical way, but that's exactly what I meant.
He is the technical man.
Yeah, sorry.
All right. No, I appreciate it. Does anyone else, Jake, Jeff, Joey?
Well, I was actually just taking notes from the guys because I'm in a similar situation as you, Rod. Like so you had the IWM. I went the DGen route and had TNA, and I'm like, I set that up at a $47 strike, a Roddy setup, and TNA's I think like around like $55 right now. My short call is at a $48 strike, so I'm like way upside down, but on a triple leveraged, basically IWM. So I was just kind of listening to what the guys were suggesting here because I'm kind of facing a similar situation right now, personally. So
yeah,
I do think we don't need to leave this until we make this point again on what she said, because that is important. If you're going to try this strategy, you're going to use Roddy. Zebras are great because you're 100 basically. Like that's why I really like them, and I'm starting to transition to more of those. But when you buy that higher put on that collar, you are lowering your delta more. And so you have to look at that. So if you create a setup that's 70 delta, 70, 75, because you had that higher put because you didn't want to have more capital being held, that's fine. But the more the stock moves, the worse your position is going to perform. And eventually, like Rob said, you'll be underwater if it moves a good bit. Or you're certainly flatten out, and then you'll start bending down eventually. So no free money in this, right? Everything has risk-reward trade-offs, and that's one when you make your setup that you just need to be aware of.
Yeah. If we're looking at the deltas, right? So the synthetic combo, like the YieldMax trade, right? The buy, call, sell, put. That's 100 together.
Yep.
The put that you just mentioned is a 24 delta.
So
right?
you're 76 overall. Which means, you know what that means. For every dollar it moves up, you're covered 76 cents of it.
Yeah. And that would be the downside of buying that put protection when it goes up.
Yeah. Now, what's that put at? 235?
Yeah.
Now, if you'd have bought that sucker at 200, you might be sitting at a 15 delta and you'd be at 85. So that's just a stronger position.
Yeah. Yep. Someone's ticking. I don't know if you guys hear that.
Yeah, sounds like a fan or something.
All right. And then to Rob's point earlier, my delta on the call is at 88, which is greater than my delta on the long, which is 66. So,
well, you got to look at it as a package. So, yeah, once the short call, that you sell every week, once it starts going higher than the setup of the Roddy, then that's when you start losing money on the delta side.
Okay, so the moral of the story is move your ass, make a move. Right?
Yes.
Right.
Okay.
Yeah, especially the lower delta the Roddy setup is, the faster you want to roll the short call up.
Yeah.
You don't want to let it, you don't want to really wait until it starts getting around 95 delta, like we talked about a long time ago. by that time you've already started losing.
So Rob, you missed the beginning of the conversation.
Yeah.
We were just talking about safe option strategies in general, right? Joe Schmo walks up to you. He says, "Yo, Robbie, I want to learn options. I want to learn safe options." What are you gonna tell him? What's your first thing that comes out of your mouth? That's safe options. What do you think of?
If it's like a brand new person, I would just say a covered call, just a straight up covered call on shares. Kind of hard to mess that up, but I mean, you definitely can mess it up, and you can definitely lose money. But yeah, I would say definitely a covered call is the safest from a newbie standpoint. But like the actual safest is a caller, right? So similar to what you did there in the Roddy, where you buy a put a little bit lower. You can do it for the same strike or for the same expiration, or you could do it for. I actually like to do a little bit more complicated version of the collar. I call it like the calendarized collar.
Oh boy.
But like the idea is you just similar to to buying a leap, you buy a 120-day plus put, right? And you buy it a little bit in the money. And that's going to increase the overall cost up front of buying the shares. So you're buying, let's say you bought this IWM 100 shares at 252, and then you buy a put for 260 that expires like in May or April or June. The cost that you're paying, so what that's going to do is that's going to let you actually sell those shares at a guaranteed price above your current above your cost basis at 260, and then you have the next 5 months to pay for that insurance that you just bought by selling calls in the short term, right? And so what I like to do that, so then I can then usually like between 5 and 10 call cycles, you'll have a completely like loss proof position. You paid for your insurance that guarantees that you can't lose money, and you're kind of comfortable to sell calls for usually probably about 12 weeks in a safe spot. I actually have it in my website too. If you want to go, I can show you. Like maybe there's like a little diagram. There's a little formula that I have that shows it.
Let me type. I have real quick. I just want to type this out as
sure.
You and Joey both are bringing up new strategies that I want to make sure we talk about in future episodes. So yours is called what? Calendar who?
Yeah, it's just a collar, but it's like I just call it a calendarized collar. It's just because the strikes are different, right? Like I buy it's like a married put and then you just sell calls against the position.
All right. And then real quick, I think that was you, Joey, right? You had a 7-day.
Yeah, 7-day to expiration. Mainly condors, but I guess you could do just a call spread or a put spread. Give market environment changes. But yeah, 7-day to expiration. Condors mainly on the XSP, which is cash settled mini version of SPX.
Okay. Yeah. All right. Let's go to this fancy website now. All right. Where are we headed here?
Yeah, if you go into options
Mm-hmm.
and then down to Theta Fortress, right above there. Yeah, there you go. And so that actually
Fortress.
section
That's
right
the
there.
nerdiest.
Yeah, I know, it's so nerdy.
no.
It's like, what can I call this silly idea? That would be cool. But like that formula kind of explains it at the top, where it's showing like, hey, you bought 100 shares of NVIDIA at 157. That would cost you 15,000. You buy the 170 put, for 140 DTE. That's going to cost 2,200. So it makes the total cost 17,932. But it's guaranteeing in 140 days from now, your guaranteed exit is 17,000 for that put strike, right? So now your maximum risk on the position is only 5.2%. So you get to all you gotta do is sell calls to cover that $932 over the next 6 months, and then you have potential to once you cross that threshold, you're in a loss-proof position kind of thing. So that's like in this little calculator below.
So this is like your Roddy.
Yeah, exactly. This is kind of I do this for a lot of my positions.
What does the table think of this? Or are you just still digesting it?
It's kind of a weird
Yeah, I've kind of heard of this strategy before. It's a pretty good one. I like it. So
you have to buy the shares?
Zebra as well, because the Zebra it's almost like an embedded put strike, because the Zebra, you have a max loss as well. So it's really similar to a married put. The only difference is you pay the extrinsic value, for the married put versus the Zebra, but that's really the only difference.
Yeah, your only at risk really is the extrinsic in the long put. That's the only thing that you have to worry about.
Right.
And a big bank account.
Yeah, I mean you can do it with leaps or synthetic longs or zebras or whatever. It's just the thing that I like about doing it with shares is that I don't have to worry about micromanaging like a synthetic position. Like worst case scenario, it can always get exercised kind of thing. But it definitely would be even more optimal to do it with synthetic. You'd have even less at risk, I think.
Or at least with the shares, you have more time on your side. So that's the good part.
Yeah.
Okay. Well, yeah. So good to see this. But like I said, we'll have a follow-up on this. SB left, I guess.
Oh, I'm back. My bad.
He's back. No, we're just talking super strategies here. This one, Theta Fortress. Like I said, we got to call this like the Robbie. I mean,
yeah.
I like these names.
Yeah. But
I have kind of an advanced thought. I don't know if you want to go there or not, but
yeah, go ahead.
I'd love to hear this group's thoughts on it.
Go for it.
Okay, you guys may see this very quickly and say, yeah, that's not going to work because of this. But I was toying around with the idea this weekend of taking a stock that doesn't generally have big violent moves. But so let's just say SoFi, for instance, that has been trading this range. No, it has earnings this week, but it's kind of really been between this, low end, 25.50, up end, maybe touch 30.50. But mostly it's been in a range right there. So on the Roddy or the Zebra, and we're producing income off that by selling those shorts, you run into, the problem where you lose money on this trades is when the stock goes down, because your Zebra's now worth less. Obviously you're collecting that, but it's worth less. So what about this idea? So go out in the future, 6 months or whatever, and wherever the current strike is going, that's fine. Set up a call Zebra and a put Zebra at the same time. Then come back to a weekly or every 2 weeks, sell a straddle, where you're selling say it's trading at 26, just whatever, 26. Sell that 24 put and a 28 call, and work that straddle. And here's what it does for you. Obviously, you're collecting both sides of that premium, and they may not be together as high as you could get right there at the money on either side, but may not be too far away. And now you have an extra $200 in both directions, to where your overall play, if the stock goes from 26 to 24, you're not really down 200 in your setup, because the put Zebra will gain 200 while the call Zebra loses 200, and vice versa. Now, does that make sense, or is that like, yeah, that's not going to work because of this or that?
No, that definitely works. I've done that before. Not with Zebras, but I just buy a straddle. Sometimes I'll do that with SPY. I'll buy a straddle and then I'll sell. It's just like a covered iron condor almost. Like you're just covering both sides, and then you feel a little more comfortable about selling those out of the money calls and puts.
Yeah, it sounds like a great
and
strategy for
with the
staying in
zebra
range.
and with the zebra setup, you're really not burning much extrinsic. So you're not losing, like on your long positions in both directions, you're really not losing a bunch daily. Maybe just it should be minute. And so even though what you may be capturing extrinsic on that put and that call, maybe a little less further out, but you're also not facing that daily extrinsic burn that you do in the Roddy.
Yeah, the tricky part is just finding a good solid stock that's not moving too much that you can still make money off of. Yeah, I was trying to do this in SPY for a while, and it was expensive, and it got pretty volatile. So it's also something you got to do kind of when VIX is low, when VIX is too high, because then you end up, if VIX is too high, then you end up having to adjust too often, or at least that's what I ran into. Every time it moves $5 or $10, you start losing money on one of those sides, and you want to try and keep it kind of neutral.
And aren't you're still protected in that scenario in both directions with outside moves, because you have a zebra that's working for you the whole time, even though it runs into it does run into its barrier where those shorts hit.
Right.
All right, we got a lot of new strategies thrown around here. What do we call that one?
I don't know. That's the camel zebra, the double hump. It's the double hump.
Double hump.
Oh man, that's awesome.
So now, 3 of you have your own episode in your future.
I don't know if mine works. No, it's just a theory.
Nobody said these will work, right?
No,
This is for fun and entertainment.
Exactly. Yeah, you could be wrong 100% of the time. All right, so we're at the almost at the 7 o'clock mark. And again, going back to the topic at hand, beginners, easiest strategy. It sounds like overall selling, if you have the shares, always say, cover calls, great way to learn, as long as you're okay with losing your shares at whatever price you choose. Or if you don't have the shares, maybe selling puts on a stock that you would not mind owning. Or as I think Jeff said, paper trade, right? So
I think that term, Rod, you got to adjust that term though. I mean, the negative connotation that you're losing shares.
Yeah.
You're trading that for cash.
Yeah.
It's to generate cash.
Which is hard. It's hard to tell people this, right? It's hard to people that don't know options, like, oh wow, I'm getting maybe $20, right? But you can lose your shares, and so to some people that's like, but they don't realize they can make it every week, or I don't know. It's options. I still think is just so underrated, and not enough people talk about it, right? A lot of people talk about it negatively. Actually, I've seen a lot of people lately on YouTube being a little negative about it, but I don't know. I think Rob, his site, maybe I was thinking like a learning section too.
Yeah, we got to build something like that for sure.
Yeah,
I have a little cover call section that explains it, but it's still it's still pretty nerdy. It's still like pretty technical.
If you were really married to those shares, don't sell options. Just don't. I mean, if that causes you stress, like that's not the play for you.
Yeah, it's hard. Like the mental side of price anchoring. I bought these shares for 25. I had to sell them at 27. Now the stock is 29. I'm not going to buy them back again. It's like it's hard. It's hard to get over that.
Yeah, I'm still with TSLL at $7.
Wow.
What your cost basis?
Well, I'm waiting for it to get back to $7.
Yeah, that's like price anchor in his head, right? Like you probably started trading it around there, got called away at 9 or something like that, and you're like, man, I can't pay 17 for this thing. What am I, crazy?
That's it, exactly.
Look, Jeff, didn't you hold on to SVIX for like 2.5 years?
No, almost a year though.
I mean, don't hold your breath on this though. I mean, TSLL, I mean, although I've seen it twice in my journey here, hit $5. So I guess never say never. But we need bad earnings for that to happen, I guess.
Yeah, no, he's out there selling robots now. I don't know if it's gonna happen.
It seems like Tesla's immune to earnings calls here lately.
Robots are dancing at the earnings calls, like
because their numbers are awful. They're terrible. Their earnings numbers are awful.
Yeah, I don't think anyone cares, right? It's I mean, I don't know about you guys. I see a hell of a lot more Teslas now on the road. It's crazy. Like Cybertrucks are becoming a normal thing to see. But
Cheese, have you looked at their earnings?
I have not really looked at their earnings, but I've just heard from other people. Yeah, look. Well, let's see. That's a performance table. Never mind.
They just go down.
Yeah, go to their earnings.
Do they have an earnings section there? I know
I think they have
here.
earnings this week, if I'm not mistaken.
Their
Wednesday,
their sales numbers just downward bend.
Oh, that was TSLL. That's why. All right.
Yeah, it's also what happened there. The EV credit just went away in September, I think. So.
Yeah, revenue growth is negative. That's not good. Net income growth negative. EPS negative. A lot of negative. I'm just looking at the first column, trailing 12 months.
Yeah.
It's all speculation. It's all everybody that talks positively about this company is always talking about the next, what's big for them on the horizon. So it's all like the activity now never supports the activity, the price.
Yeah, it's the Jetsons and the iRobot scenario.
Yep.
You want a robot, right?
Yeah. I hear you. I'm not mad about that, but they just hadn't sold one yet. They're not close.
Yeah. All right.
Definitely need one to shovel the snow.
Yeah.
Oh yeah.
I was out there 4 hours yesterday. We gotta go watch it. It's actually looks like it's snowing still. Oh my god. These kids are never going back to school. All right. Now we're at the hour, so let's begin to close out real quick. As always, this is not financial advice. I am not a financial advisor. This video was for fun and entertainment. None of these guys are financial advisors, right? They're just Joe Schmoes in the Discord, hanging out, doing stuff, making money, losing money, all that fun stuff. So I'm gonna thank you all for joining today. So again, this is the occasional Monday roundtable, right? We talk about whatever. It's a show about nothing. We talk about nothing. But you guys have suggestions, either the people listening or the people on the roundtable, feel free to let me know. But yeah, again, it's the chat continues on the Discord. Yes, Dylan. So it just keeps going all day. But do you guys, before we head out, any questions or ideas for future roundtables? The coffee's not working, huh? All right.
My brain's not working yet.
The double hump,
Rob just
baby.
woke up, right?
Yeah, I definitely just woke up.
Keyword, join the Discord.
Yeah. Look at that.
Do the double hump.
The
Double hump.
double humpity doodah. All right. So yeah, on that note, I guess we shall close out. We'll do the keyword first. And should I play music?
Always. I'm enjoying that.
All right. So maybe I'll let you guys pick the video. Let's go to videos, oldest. Here's the dog getting ready to bark. Let's see. I got some. Where's my? When I started talking about options, you guys would probably crack up seeing these videos. Selling puts on TDS. Remember that company? Telephone and Data Systems. how to sell a put on the Robinhood app. I don't know. What do you guys think? Here, the wheel strategy.
There we go.
I'll mute it since people on the online can't hear it anyway. All right, so I'm gonna play music and then just shut down the video. But in the meantime, I think the keyword, I don't know, we have two keywords. Is it join the Discord or is it double humping?
Double humping sounds much funner.
Okay, so keyword today, if you made it this far in the video and you want to prove it, you got to be double humping. So you got to type in the comments down below, double humping per SB, of course. All right, I'm going to play some music and then we shall, we're going to close it out after that. Let's put this full screen, as you can see my ugly mug. And let's go to the song.
Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plot in the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Yeah, builds people up, less results address. Yeah, streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his past. Spreadsheet brain with a streetwise frame. Plays a discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah, 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 yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud just to test that will. Same mindset when the chalk goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom! Freedom! Freedom!
All right, that wraps it up. Thank you for watching and have a good day. Later.